Hi, I'm Tom Lydon with ETF Trends here in Washington, D.C. at the Charles Schwab Institutional Conference here with Jay Mooreland, who's the founder of Behavioral Finance Network. Great seeing you, Jay.
Yeah, likewise, Tom, thank you.
I know you're speaking at the conference about behavioral finance, and we need this conversation right now because, boy, you know, the market's been great for about 9 years. Both stocks, bonds did okay. But now with this recent volatility, not only clients are getting a little shaky, but also advisors need a little bit of guidance on how to handle the emotions of investors.
Right.
What are some things we should talk about?
Well, first off, I think we need to understand that every investor is also an advisor. I should say every advisor is an investor. So when we talk about investors are irrational and that they have emotions, that's us too. We're all human beings. But what I do is I empower advisors to help them know what to do now as far as what messaging to the client, because it forces them to get behind the messaging too. I think that's really important. So a few things for advisors is that they need to be proactive. If we wait until the phone rings or we get the email from the client, oftentimes it's too late because those thoughts and emotions have already been percolating inside of them. And if the amygdala is triggered, that does not allow us to think rationally. So as the advisor is trying to give them rational, logical explanations to stick with the plan, their ability to actually understand, comprehend that information is shot. So what we need to do is we need to do proactive messaging now before the volatility starts, because if we wait until they react, it's too late.
And that's pretty easy, isn't it? Can it be as simple as emails?
Emails, well, yes, absolutely. It's got to be a consistent process. One thing we have to realize, and advisors a lot of times say, they get frustrated with clients because they say, you know what, I've had this discussion with you before, 2 years ago, you said okay to it, now you're abandoning the plan. But because of a bias called the availability bias, which influences how we perceive things, the more often we hear information, the more we tend to gravitate towards that opinion. The media is 24/7. So we need to be messaging stuff through email, that's fine, but also do it proactively and consistently. So it's not just messaging at once. We have to have a program set up, a systematic program, because we're fighting the media and its influences all the time. So if we don't constantly remind them through engaging, fun, brief messages about how to filter the noise and focus on the plan, we're not going to be that effective.
So not just tell them from an economic or market standpoint, but actually specifically address their emotions and saying, this may cause you to feel this way. We understand that. This is some of the tools you can use to overcome this negative feeling. Is that right? Something
Absolutely,
like that? Okay.
Absolutely. So, and one thing too, advisors oftentimes will think, I'll talk to them and they'll say, hey, like last week was a pretty volatile week, right?
Yeah.
So they'll say, hey, I didn't have a single client call me, I guess I'm doing a good job. They'll pat themselves on the back. But here's the thing, it's like, well, what did you message out to them last week? Well, nothing, I didn't need to, nobody called me. And it's like, but you don't know how many people are concerned inside.
Yeah.
And they're saying, I'm really concerned, but I don't want to bother my advisor, but it's percolating underneath it. So one thing I told my network members to do last week was I put together an email forum and I said, blast this thing out proactively. And it basically said, hey, volatility's happening, it's uncomfortable, I get it, we're all uncomfortable, but through my X amount of years of advisory service, I've learned that the key thing is to keep the right perspective. Here are 3 points that help me maintain perspective in volatile times like this.
Great.
And then boom, boom, boom. And the advisors loved it. It's a way to be proactive. It empathizes with the client because it says, hey, I feel this too, but I'm not allowing the emotions to get to me. Instead, I take a step back and I'm keeping perspective, and here's the perspective I'm now sharing with you.
That's fantastic. Now you've written a book. What's the title of the book?
The Emotional Investor.
The Emotional Investor, and you mentioned a network. If advisors wanted to connect with your network, how could they do that?
Yeah, just go to behavioralfinancenetwork.com and they can check it out. They can see some testimonials from other advisors. It's a great program for advisors that are looking for unique, turnkey behavioral content that they can just take and use, as well as onboarding, messaging, and coaching.
Excellent. Jay, really enjoyed it. Congratulations.
Great. Thanks so much.